Hi, in this video we're talking about Bitcoin. Does it make sense to buy back in? How much lower could it drop? And where will the growth start? And up to what targets does it make sense to hold positions? In other words, all the most interesting things about Bitcoin for February 2026. Friends, in front of you are the global Bitcoin charts. I already showed them at the beginning of this year, in January. Back then I marked out the zones, saying that we would come into the range of 57 to 71,000. It's quite a wide range, but nevertheless, we made it there. And now there has been a bounce. In other words, Bitcoin bounced. So naturally, thoughts arise. Maybe it is finally time to buy, hold, and keep it for a very long period. Overall, I want to once again highlight the specific model that currently prevails, and which I am personally following. It's a diagonal that has been developing for us actually since 2020. All the movements are presented as threes. Well, not since 2020, even a bit earlier. The latest movement is also presented as a 3. And in this structure, there is a key point that we need. If you haven't watched the previous video, let me repeat myself. We have a second wave. This is a correction that lasted 360 days. And in the diagonal, we need the fourth wave to meet a number of conditions. The first is an overlap with our previous extremum, which we've already reached. So formally, the targets for the depth of the decline have been met. Nevertheless, in terms of timing, we need to do something similar. That's the first point. And the second condition is that wave 4 must take less time than wave 2. So if we compare and apply these timeframes, we get October 2026. That's the deadline by which we need to resume growth. Accordingly, the current movement is most likely, if we compare it, only comparable to the first part, that is, the previous decline of 2021, 21, 22. And here, the local rebound is just a temporary phase. In other words, this is not a continuation of growth. Most likely, there will be a correction and one more final decline. It is important to note here that if we reverse from the current zone, there is only one level above that might be of interest to us. That is 97,330. Upon reaching this level, we can say that the correction was deep enough, and most likely, we will simply be testing the already achieved targets in the range of $57 to $71,000. However, if we form a consolidation in the current area, meaning it lasts for a while with only a slight insignificant pullback upwards, then we will move down to the next level. And the next level is around 43,000. But that's a matter for the future. We will have plenty of opportunities to talk about Bitcoin again, so for now don't pay attention to that. Our key question is whether a rebound has occurred and if it makes sense to expect a reversal. Here we switch to the local chart. This means we're looking at the section from October 25th, where we can actually see the current situation. We had the first decline in 3 waves, which we completed. Then we had a correction, and my main scenario is that this is a correction of wave B. So we've formed an intermediate correction and are now actually declining. What concerns me? Formally, as you can see, the 5-wave structure is complete here. However, we don't have a giver, we don't have a divergence as a signal that a reversal should happen. And in fact, if we consider this part as a diagonal, then we can assume that the correction was already completed back there. In that case, we only have wave 3 and the potential for another decline in the near future. Here, in a similar way, I have highlighted a time zone during which this correction may form. That is more or less until March we could remain in a sideways trend, after which the final decline will occur. Now, regarding the levels, a cancellation of the decline and a reversal to the upside. Let me remind you, this target around 97,000 opens up if Bitcoin breaks through $78,000 or if there is a reverse breakout of the uncertainty channel. If a distinct 3-wave pattern begins to form in the local zone, then we have the potential for a short selling trade opportunity, with a minor downward adjustment of the minimum, which can be effectively utilized for our strategy. You can also use skewed pitchforks in this way, which, with their inner zone, will reflect the most significant range where the correction may be completed. I've highlighted it so it's visually clear what I'm talking about. That is, a 3-wave pattern should form within this range. So friends, at the moment, the first answer to the question is, if you are planning to hold positions, we need to take into account the possibility of another decline. In this case, testing the lower boundary of the range down to 57,000 is possible, with a slight false breakout to the downside. In other words, I need to see a consolidation. So, it's not about setting a strict and clear stop loss, but rather about monitoring to ensure there is no consolidation below 57,000. This is according to the Chicago Mercantile Exchange, CME. If on the other hand, we actually see a reversal, then we can take that into account. Therefore, if you are building up holding positions for the medium term, please take into account the risk of a decline and keep monitoring and controlling the situation. So once again, a drop below 57,000 opens the way to 43 and immediately creates the potential for a much stronger decline. And furthermore, a breakout back above 77,000 or 78,000 will open the way for a long trade if you are looking for a safer position. I am a proponent of exactly these kinds of trades, which allow us to protect ourselves, confirm that a reversal has already occurred, and at the same time have targets that are clearly marked on the chart. So friends, that's the entire plan for February and possibly even for March. So if you have any questions, write them in the comments. Well, I've done my job. This was Dimitri with you. Goodbye, everyone.